Hello and good morning. My name is Rufas Kamau, Markets Analyst at FX Pesa, and feel welcome to the Market Snapshot series. So on today's episode, we'll be looking at what's currently happening in the markets. We look at some key price levels and also the news we're expecting today, as well as for tomorrow. So you can see there's a one of this webinar concerning NFP news tomorrow. Thank you. What do you expect about NFP news tomorrow? I think it's a big concern, and it's the right thing to be concerned about. Good morning, Charles. Thanks, guys. Thanks for joining. So let's start right away. So I'll begin with a trip through the economic calendar. We see what we're expecting. So we all know that since Tuesday, we've been having quite a lot of news, including interest rate data and also the Fed Chair Powell speech that the markets on Tuesday after. So yesterday, we didn't have much happening in the markets. However, there's one key highlight data called the ADP non-farm employment change. So ADP is short for automatic data processing. It's the company that basically does the research and identifies the non-farm employment change number before the official government data comes out. So in this case, it's basically taken as a leading indicator of what we expect the non-farm payrolls to be. So as you can see, in the previous reading, it was 119,000 jobs created in the US. And now, after they've done their research, they have identified that the outcome was 250K. So this refers to the estimated change in the number of employed people during the previous month, excluding the farming industry and the government. So whenever you look at this data and you see such a big jump, remember this is more than double, 119K to 152K. Then there is that expectation that we'll be seeing the jobs spike. However, there's also the consideration that jobs last month, they had an unusual spike by 517K. So in this case, we would be seeing a much bigger number, but not bigger than what we saw in January. So that's the overall expectation for my side. So besides these, there was also the job openings. This came in at 6 p.m. yesterday, right after the Central Bank of Canada decided to maintain interest rates at 4.5%. So the most interesting one is the job opening, because even the Fed chair was also speaking about. So this refers to the number of job openings during the reported month in the farming industry. So in this case, we are looking at the number of job openings in the US. Currently, they are at 10.8. So whenever you see this number rising, it means that the economy is expanding faster than the workforce. If the number is smaller, then the workforce is expanding faster than the economy. So if you try and look at this data and see how it has been happening, during the COVID, that is the peak COVID around June 2020. So a lot of people had stopped working out of fears, as well as being sick, basically. So at this period, the job openings were very small. But as things normalized, the job openings started rising, and since then there have been a consistent rise until we saw a peak in May last year. So there is no job openings started going down before bottoming somewhere around October. And now you can see that there is a certain trend that the number of job openings are expanding again, and this is in line with economic expansion. So yes, it's good for the economy, but the Fed is not very happy with there being higher job openings because it basically makes the wages situation tougher to handle, where we'll be seeing rising wages, and at the same time, we would be seeing rising prices as a result of that. making the inflation problem worse. So going into Friday, we'll be having one more data point. And this data point is the unemployment claims as well as challenger job cuts. So challenger job cuts is basically a data point that is released by challenger, gray and Christmas integrated. And this is the change in the number of job cuts announced by employers. So in the previous reading, there was a spike by around 440%. So we are expecting the number to get smaller. In January, this is when most companies were announcing firings. So it happened with Facebook. So many companies, including Twitter, had made a large number of firings. However, the trend seems to have slowed down. That this trend is going down. And then later on, we'll be looking at the unemployment claims. It's a weekly data point that basically shows us the number of individuals who filed for unemployment insurance for the first time during the past week. With the previous reading, it was 190K, and now we expect a slight increase to 195K. So once we get these two data points, and we combine with the data points that we saw yesterday, that is the ADP non-farm payrolls and the job openings, then we'll have a brief idea of what we might be expecting on Friday when we see the non-farm employment change. So this is the most widely used measure, the number of jobs created in a month in the US. So investors will be focusing on this data. So despite this big number of 517K in the last reading, we expect another hike of 224K. So if the actual number of jobs come in stronger than this, then it basically means that the Fed has a tougher job addressing the inflation problem, and the Fed might move for a stronger rate hike on its next meeting on March 22nd. So investors will be looking to trade ahead of the Fed decision. So in this case, bigger than expected employment change number will be very positive for the dollar and very negative for US equities. So on the other hand, if we happen to see a much smaller number in terms of non-farm employment change, then that will be negative for the dollar and positive for equities. So unemployment rate is at a 54-year low at 3.4%. So if it maintains at that level, that will be quite good for the dollar. So now that we understand that, when you now jump in and look at currencies that they are performing, remember, I've been mentioning this over and over again, that it makes a lot of sense to be very bullish on USD/JPY as a result of what we are seeing happening between the two central banks, Central Bank of the US and the Central Bank of Japan. And now you can see we have a very nice trend. The market pulls back, rises, and then pulls back. So now we were estimating that the market would drop and get to this previous high here. So it happened, reached that area, went back, then is continuing to push further down. And now it seems like a nice target now be on the lower trend line, somewhere around this area. So if I move this and this is extended all the way down, then it makes a lot of sense to observe this chart around this area. So the idea for USD/JPY pair is continue trading the strength. That is the bullish pattern that we've been seeing since the 31st of January. So every time we have a pullback, it's often considered as an entry for a continuation of the trend. So we saw it happening earlier this week with these tails here, which marked the basis for our bottom, and we managed to enjoy the rally up. So now the price is back and retesting this lower trend line. So if you happen to see signs of bullish entry, then it might make sense to go a bullish position at this area. So as for Euro USD, this is what we are currently experiencing. So a market that is consistently pushing down. We saw it break or breach the upper trend line. So after this, we had the news that eventually strengthened the dollar and pushed the Euro USD all the way down. So we managed to get to the target area, the previous support. But since we got to this area, notice that the market has been largely sideways. So nothing much is happening in this chart. Seems like the chart is just moving sideways until we get to that point where the US announces the payrolls and the market gets firepower to make another either up or down, depending on the outcome of the news. So as for USD CAD, there was a big break here. I remember drawing this triangle with you guys. Remember doing this. I think it was on Monday. Then we had the break. The market rallied all the way up Tuesday. Then yesterday, we had the interest rate used in Canada, where the Bank of Canada maintained rates level. So that was a weakness in itself for the Canadian dollar, and the US dollar made yet another leg is mental. So we were expecting that the market would trade within these boundaries, within these lines. But then after the news, there was a break higher, and now the market is moving sideways again. So yes, we don't have a direction, but there was a good continuation here. So we will be waiting keenly the non-farm payrolls to identify potential trading opportunities. So as for gold, we didn't quite get to the support of 18.6. Remember, this is where we're expecting the price to fall. So from the 15-minute chart, you can already see that this is what the market is displaying so far. So a market is just swinging up and down, up and down. We don't have a clear direction. This is what we normally describe as a consolidation. So whenever there's no gas in the market, you'll notice that price often consolidates until we have the next fuel driving prices to another key level. So it's the same case for Audi USD. So if I was to use this horizontal line and this other one, then it's easier to observe that since this price level here, the market has just been moving sideways. So US 500 or the S&P 500, we were anticipating what I described as a BOJ Governor on Monday. So BOJ Governor is basically a market that makes inverted P formation. So I mentioned that this was a major resistance, market found some resistance, and I expect a similar angle back down. So as you can see, immediately after the news, the S&P 500 dropped massively before trading sideways, but now it seems like it's about to break and go down. So notice that for this particular period of time, and this is since yesterday, majority of the price action has been sideways. So yes, there was an attempt to go down, which failed yesterday in the evening. But then as we approach, especially the London and New York session, we could be seeing some other downside or some other activity happening in the S&P 500. So the idea is that the market reverses this abnormal move. I would call this normal, since there was no fundamental supporting itself. So there is a good chance to see some further downside. Basically, there is the impact of these markets. So a similar case is expected for the US 30, which is way closer to the support level, and also for the US Tech 100. So you can already see the BOJ Governor forming the US Tech 100. So market making a rally and then reversing and pushing down. So right now it's attempting to break towards the lower side. So we can all see that these was acting as the resistance. And if you check out the support levels, they seem to be playing somewhere around this area. So if there's a nice break, then we continue trading downwards, betting that the particular trend that was established by Jay Powell continues until we get to the next meeting on the 22nd of this month. So on the news side, we don't expect much to be happening today. So just a moment. So later in the day, besides the challenger job cuts and unemployment claims, we'll be listening to a speech from FOMC member Bar. This would add some fuel to markets. Natural gas storage, 30-year bond auction, and then Governor Council member Rogers speaks on behalf of the Bank of Canada. Then tomorrow we look at the Business New Zealand Manufacturing Index. Manufacturing sales totally, this is New Zealand. Then Japanese household spending, user price index, and monetary policy statement. Before we see the Bank of Japan rate, which we expect to be paid. at negative 0.1%. Then the BOJ press conference. Remember, this is tomorrow in the morning. So we will be expecting a lot of activity to be happening with the Japanese. So as I mentioned, there is a good chance of seeing some further upside potential on USD JPY. Of course, I could be wrong. So you have to practice this discussion and make your decision based on research. So UK GDP tomorrow is expected to be 0.1%. This is month. Then we look at construction output for the UK, goods trade balance, index of services, industrial production, manufacturing production, all affecting the UK pound. Then the Eurozone, we'll see the French trade balance, NIESR GDP estimate for UK, before we look at the employment change for Canada, as well as the non-farm employment change for the US. So a lot of activity will be expected tomorrow. Early in the morning, we expect the JPY to be the most volatile currency. Then mid-morning, the UK pound. This is quite a big data set from GDP all the way to manufacturing production. So these could cause some volatility in UK pound pairs. Then in the afternoon, this is when we look at Canadian as well as US data. So the Canadian dollar is expected to be volatile as well, with the most volatility being the US dollar after the announcement of the non-farm payrolls. So remember, today we'll be having another session. This will be happening at 8 p.m. So just go to the FX Pesa YouTube channel, check out the session. It's called Market Pulse. Then at 8 p.m., we'll have more data to project what we expect to be happening. So at 8 p.m., we already have the Challenger job cuts data. We'll have the unemployment claims. We'll have a speech by FOMC member. So when we combine these three data sets, then we can easily identify a potential direction to expect for the non-farm payrolls. So thank you very much, guys. Thank you for your time. Just seeing the sound is out. I hope it's good right now. There's a question about 2-year and 10-year inversion. I think we'll be explaining this later in the evening. Pound yen sound is an issue. Apologies, everyone. I didn't check on this. Hopefully, you're able to capture some content today. So let's meet in the evening at 8 p.m. So thank you.